Okay, good afternoon, everyone. This is Gary's Traders Group. This is your host, Gary Humeski. It is Monday, October the 13th, a little after 4 p.m. Eastern Time. Want to get right into it, so let's get right through the disclaimer. This webinar is for educational purposes only. I'm not a licensed representative or giving trading advice. Trading does involve risk. Make sure that you check out all the factors before you make a trading decision. These webinars are designed to educate you and inform you. All right. Okay, does anybody have one word they want to say for today's market? Just go ahead and type it in. Bad. Okay, Leon. I'll take that. Anybody else have a word for today in the market? Well, they went down and ended up in the last hour and a half losing almost 200 points again. I call it bloody. Pretty bloody. All right, let's take a look at the macro picture. See what the heck is going on. You know, I was playing with these Fibonacci retracements trying to find time frames that reflected where this market has gone through. Somebody said they had more shorts than longs today, and they got a smiley on their face, so that's good. Yeah, I mean, folks, if all you did is look at this one chart on the daily chart on the Dow Jones, and you had this type of setup, I've changed the look a little bit so you guys can see some things that I think that are powerful to look at. For example, I'm going to blow this chart up and show you what this thing looks like on a yearly basis, and you'll see an interesting situation. See these two dotted lines? So for your guys' edification, that is the 49.89 EMAs. I use these for my day trading program, but whenever the 49 is above the 89, you stay long on a longer term time frame. When the 89 falls below, or the 49 falls below the 89, then you go short. But geez, you know, you'd have to have some real latitude, because from 17,350 down to today's low of 16,321, the Dow Jones has lost since its high on the 19th of September 6%. That is 6% loss right there. So it is quite significant. Let's see, restore cells. So I was trying to find time frames that reflected this, and I was actually going to go to yearly chart. I stuck to a 6-month chart, though. I think that's relative, because you can see on a 6-month chart here on the S&P, we're really flirting with the 61.8% retracement. It's tried to on the NASDAQ go down. On the NASDAQ, we've lost 8.4%. On the S&P, 6.7%, and the Dow on 6%. So we've had some very, very significant losses, but again, not untypical for this time of the year. This is you know, people have been waiting for a good correction in the market and a lot of volatility, and that's exactly what we've seen over the course of the last month. So this is not surprising to me. You know, if you look at all of these indicators, it really tells you to stay out of the market if you're going to be long. Go in cash. Wait for the turnaround in the market to start trending up. It doesn't go down forever. It doesn't go up forever. There's going to be a lot of good bargains out there, as there is right now. And so you either buy a lot of time, guys, or stay on the sideline with cash, or buy some protection and shorts on the VIX. As you recall, I think I had said short the VIX a while ago. Anybody who decided to do that has just cleaned up. Now, another thing I want to point out to everyone is hold on a second. This was last week's discussion. As you see, I've put in under comments on all of the longs, wait for market trend to reverse. On the shorts, of course, wait for market trend to reverse, but you could have done that because these were still all short. So you could have made money on those. Mixed bag on earnings last week. Costco was a good one for people. Anybody who bought the 127s made money. Here's my point I'm making behind this whole thing, not to go over this, but I'm giving another strategy, as you see, for almost every single one of these. I'm putting spreads on there. Folks, one of the ways you can trade this market is by spread trading only, not directional. It almost works like a straddle to a certain degree, where you're straddling a horse from one side to the other, and your legs are straddling this big horse, but they're even. They're not cockeyed one way or the other. That would be a strangle. And if you're watching the market, whichever way the market ends up trending, you can drop one leg, either buy it back or sell it, whichever leg you're dropping, and let the other one run, and you'll make money instead of just being directional, trying to play one direction and then realizing, geez, this market still hasn't turned around to be in a happy froggy situation, and we're still in a pretty nasty downtrend, which at this juncture I would see no reversal, but I'm going to bite my tongue on that because we are getting in way oversold territory, especially on the DPO. Whenever the DPO follows away from the Bollingers that far, there's the leashing effect that takes place. And this is a very common known fact. Whenever price meanders far away from the mean, it tends to pull back towards the mean. The question is when. But I'm just sharing with you guys, this thing is the DPO is starting to get in oversold territory. As well as the Bollinger Bands are starting as well to get in oversold territory. Are we done yet? I don't know. I think we're getting close. We're at the bottom of a 6-month linear regression on a 90% width. That's what these are set at. So, if you played any kind of bull put spreads, you could have dropped on any of the longs. On any of the longs, if you guys decide you want to play this market, that's one of the ways to do it and still make money. So just a thought there for you guys to think about in a form of trading in this type of market. All right. Let me rearrange some of this here. Let's look at the short-term picture. I've almost lost my voice today, so you'll have to bear with me, folks. This is the economic calendar of the news events that are coming up for this week that we need to be aware of. We got the Philly Fed coming out on Wednesday. Retail sales, not a real big one, but we're coming into the retail sales season, so this will kind of be indicative to set the tone for the rest of the retailers of how are they voting here. Industrial production on Thursday, the Philly Fed survey on Friday. I'm sorry, what I meant to say is the PPI, the producer price index, is coming out on Wednesday. The Philly Fed is coming out on Thursday, and then the housing starts on Friday. We got Yellen speaking in the morning, so watch out. Watch out there, folks. This could be another volatile week again. Now, we all know what's happening on Thursday, right? Thursday after market. Who's got any calls on Google right now? Anybody? There's one. Just one person? There's got to be more than one. Let's take a look at Google and see what's going on with it. First of all, from a seasonal standpoint, we know that Google is a 90% winner. There's only 1 year that it missed. That was in 2012. That was the year that it tanked. 2012 was a bad year in the fall for almost every company. It's just a bad year. But every other year it's been very, very strong. So if you look at that average move of 10.87 and you apply that to the current price on Google to determine a strike level, it looks like there's a lot of people here, there's some shorts out here, but there's a lot of people also loading up at all sorts of different strike levels. If you look at the spot month, you see some people out here at the 580s and 585s. Guess I need to go a little bit further out. You see a lot of interest here at the 600s, 4,340. Volatility is 59.96. You know, there's a way to check that against history. There is a site called iVolatility, which is a great site to use. And you can check to see if, let's see, am I logged into this? Yeah. You go to basic options right here, and then type in whatever symbol you're looking at. Let's maybe make this a little bit smaller so we can all see it a little bit better. So here is historical volatility 10 days ago. It was only 18 versus, you can go to the chart right here and it's really graphically representative. The brown line, if you can see this, well, let's try it again. The brown line is representing current volatility and the blue is historical. So we're really getting up there in speculation and fear. So one of the things you can remember is this easy way to understand volatility is look at the IV of what your spot month is, and let's just take a look at the 600s. It's at 59. And then take a look at the next month out at the same strike level of the 600s. Oops, is 31. So you've got 25% volatility that will be sucked out of that option. That's how much it's being inflated on the spot month. So, you know, even though you're saying, well, gosh, that's cheap. Yeah, it is, because there's not a lot of time, but there's tremendous volatility as well. And that's, you know, Google at 544 needs to bust through that 600 in order for you to make money, which is 60 points, which is not unrealistic for Google from a seasonal historical perspective. You know, it did 87 points last year. So using the 10.87 as our benchmark to figure out a target, 544 times 1.1087. That's not right. Let's try it again. 544 times 1.1087 gives me a target price of 603. So unless this market continues tomorrow, and one of the ways you can look at it is on any brokerage firm, you can type in the future symbols of /YMZ4, which is for the and they're done in quarters, and you'll see what the pre-market is doing, and you'll see if it's a negative number or a positive number. If this thing really starts bumping up strong beforehand, then we know that this market's ready to turn back around. Now, there's a lot of fear out there and money that's being made because of the Ebola and what's happening. So, I think that's adding fuel to the fire right now. Let's see, somebody's saying in the November 605s, do you think it has a chance to be in the money? Or since the drop over the last week, should I buy more at another strike price? Well, again, from a historical perspective, based on today's close, that's kind of where we're looking at as a target. On average, could be more, could be less. I think at a 605, it really depends on what you paid. For the Novembers, I'm sure that you've probably paid more than what they're currently worth since the market's just gone down, and Google's gone down $10. But it's still relatively inexpensive, and it's still at a premium right now that's less than 1% of the stock price. I don't know what you paid. Double downing and adding more to a position, I generally, as a rule of thumb, Laura, I don't do. I make my decision based on money management, based on what I'm going to go into that position. And I very rarely, I'm not in a capital position to ladder in if the price, in other words, is going against me and I'm long. You can ladder in to buy more to dollar cost average. And that concept works if you've got the wherewithal to be able to withstand the loss based on the averaging into your position. I don't. I set a certain dollar amount per trade. I either make it or I don't make it. One of the things we can do is analyze Google real quick. We'll look at the November 605s. Now, keep in mind, this is today's pricing. Okay, Lori? So let's not simulate, based on today's Greeks and time value and so forth, what your premium is. I mean, you can put in your premium onto this if you use Thinkorswim to be able to analyze something to see the profit or potential risk. So go to risk profile, and it's going to give you a today's, in other words, if this thing closes at 600 today, okay, you can see the white is today's date and the 22nd is on expiration Friday. If it closes at 600, you're losing $570. You can see right here if it closed at 600. If it closes at 610, well, you're at 34. So really, it's got to go beyond. You can see the right below the hand here. Based on today's Greeks, mind you, it needs to get up to about 611. Let's call it, to be exact, there's the exact 610 in order for you to profit. If that's what it closes at on expiration Friday. Now, this is assuming that it closes today at 600, and of course, this is the kind of money that you could make if it was at 600. In other words, it popped up and stayed at $600 with this much time value left, and it closed at 600. Your option that you paid $570 for would be worth $2,290 or thereabouts, $2,300. If you go to the probability analysis, this has the expiration cones, which I prefer to use on the charting system. and then you have the various expiration months. So you'd be looking at November 14, 40 days. It's pretty much even across the board. It's saying there's a 20.8% probability for it to be above 587. This is not a real good tool to use because we're expecting a huge gap. So I'd prefer to maybe go to charts. Boy, look at Google just tanked hard. Let's add in the probability cone here, and this will give you a better idea of where, based on today's Greeks and time value that's left, we're looking potentially at 612 for November's expiration. Probably need to change these things completely and use an extension to see if it comes close to the 612. I like using 6 months for this. Go from the low to the high to the close. What did it close at today? 544. That's pretty close. So yeah, 605 would put it at the 61.8 retracement, and so between 605 and 612 I think is realistic for Google if they do well on earnings. And everything is, right now from my understanding, all the analysts and everybody are predicting that Google should do well. So, you know, straddles, people say, well, do you want to play a straddle on it? You know, unless you're buying time, straddle on a shorter month, even 1 month out, unless you drop one leg real quick and let the other one run, and generally with a gap, which is what happens with Google, that strategy doesn't work. Okay? So this will help, I think, confirm you know, Google is way oversold. Of course, it's following the market. Folks, I think in the next couple of days, you'll really see some things start to turn around. We've had some very significant retracement on all the indices, and it's getting towards that middle part, towards the third part of the month, coming into that in the next week, week and a half. And generally what's going to happen is positive earnings will turn the sentiment of the consumer around. One of the big ones, as we all know, this week is going to be Google. Google does well. That tends to inspire people. What's the other one we have coming up this week after market? It's happening on Wednesday. Anybody tell me? Anybody know what's the earnings that are coming out? Netflix is coming out Wednesday after market on the 15th. And we have a historical precedence of a pop. Netflix has expanded into Europe, and they're continuing their expansion. Their model works extremely well. They've really capitalized on being able to tap into the younger audience and all the technological tools that have come out, be it from the the pads to the phones, to laptops, and all the mobility that's being created with technology and the ability to stream videos and movies through that for a very inexpensive amount. I mean, it's $8.99, guys. It's not a lot of money. So if you're using the law of large numbers, which is kind of what VectorVest's success claim to fame was with their teaser $9.99 a month rate. You know, I once told Pete that. Pete was at a show spending $25,000 for a end cap booth with Sonny and selling a $5,000 ticket item, and he always scratched his head wondering, how the heck does VectorVest make money at $9.99? I said, Pete, that's the hook. Their upsell is huge. The average consumer is paying about between $80 to $120 a month based on what program they're choosing. You'd multiply that by hundreds of thousands of people. Now you can see where it becomes very profitable. Same concept, law of large numbers, providing great value product. That's what Netflix is doing. Average of 9.14. Google's at 438. I believe that's what it was, 934, wasn't it? No, 914. Okay, puts me at a target of 478. So 475. It's kind of pricey, isn't it? I mean, from a cash standpoint, it's got a 30 delta, which is good. And in all reality, you know, that's 85 cents difference. If we said we could pick that up for $10, let's say, you know, is $10 a cheap premium on a $438 stock? Well, it's 2.2% thereabouts. It's not what I would consider to say cheap, but in all reality, when you look at the price of the stock, it relative to the premium you're paying, it is relatively within the ballpark of where you want to be. Everything's at the bottom. But remember, I put in that 89.49. You guys can play with that. Real powerful indicator. We still have, if you look at this is interesting to note, even with today's downturn, we don't have a break in the DPO from the Bollinger Bands, even though it tanked and lost 13 points today. Bouncing right off the bottom. Of the low, what I originally did, the low, and then did the extensions, 437. I mean, that's real close, almost reaching a double bottom. So a lot of people are stretching further out at the 506s, or I should say, you know, people could stretch out because of the probability of it going up. But based on historical, I wouldn't trade it out that far. I'd stay within the parameters, the 475, 480s. I think that's what, well, actually, when I did my analysis, I put 500. I'm going to have to change these. Also, guys, remember, when you get my sheets and you're looking at this, you know, and you're looking at the various symbols and you're looking at the strikes, please make your own decisions and adjust the strikes according to the day that you're thinking of entering. All right, because these things, remember, I'm doing over the weekend, and when you throw in a market like this, that everything becomes off. You know, where I'm saying, you know, look at potentially the 475s. That's where, based on historical precedent, kind of puts a target. Could I stretch a little bit more? Probably. But one of the things we also know, folks, this stock can move $13.5, $15 in one day. It could do the same tomorrow. It could go right back up $15 tomorrow, 17, and then again on Wednesday if the market really starts turning around. So now all of a sudden, instead of, you know, the 475s, you could be looking at the 500, 505, 515s. I have found after 6 years of doing this, when I stick with the accuracy of the average without form fitting, you know, unless there's a huge anomaly of like 164% or something one year, yeah, then it's skewing with the averages. But when I stay with that, and I multiply it by the closing price of the day that I'm looking to enter, it ends up being quite accurate in its ability for the stock to move close to that target price. Okay, so keep that in mind. All right, so Netflix is coming out on Wednesday. Take a look at that. We talked about Google. And any one of these you can do again, bull call spreads. Like, for example, here, the 475, you could do the 470, 475, and pick that up for $1.50. That's really cheap, folks. You know, you could more than double your money. You spend 150, you could potentially make 350. That's a good return on investment. Let's see, what else do I want to talk about today? Well, one of our members, Bob, brought up a good one. Thank you for sharing, Bob. And it's when I was looking, and I forgot Southwest Energy, SWN. The only concern I have, and you know, a lot of you people out there subscribe to other stuff, and I really appreciate, you know, the info you guys email me, because it just adds to the group. You know, I remember talking to some people, reading something in the last 2-3 weeks, you know, about energy, you know, and about oil, and you know, is it going to act the way it historically should, or is there infighting? Is there a war going on? Is it going to be held down to line somebody's pockets? Is that what's happening? Well, yeah, I mean, it definitely is. All the oil plays are just not working out. Same with the energy plays is my concern. And this, of course, is an energy company, Southwest Energy. One of my concerns is this right here. You know, I've got these are, by the way, I've changed these to 49.89 on Best Choice for myself because it's a cleaner picture. Also gives a larger picture of the overall trend. I've got everything crossed the 200, 49.89, everything with a downtrend, and I'm sure this thing just tanked even further down today. So until things start turning around, any of these longs I'd stay away from. It's simple as that. It doesn't mean that they're not going to happen. It's just timing is everything. So either, again, sit on the sidelines. If you see pre-market starting to jump up, when you can do the /YMZ4 or /ESZ4, at least on Thinkorswim. These are the symbols that will show you what the futures are. You can see what's happening pre-market before you get up, go to work, go to golf, go to swim, go walk the dog, whatever you're doing. You can see, you know, based on what time zone you're on, where the market is going to be heading. I mean, pretty much. Even though today it was whipsaw, up, down, up, down, up, down, and finally just towards the end of the day in the last hour and a half, the short sellers just took over heavily. And the decliners beat the advancers in a tremendously big amount. So, but Southwest Energy is a potential play that should be coming up. It's 10 out of 10. There's nothing nothing fundamentally wrong with this company to create this kind of downturn where it continues. I just think this is a reflection of all the various energy companies. CXO, another one, you know, really beat down hard. CLR, WLL. These are all the ones that I was looking at that I think are strong historical plays. You know, if you get all of from the historical perspective, they all have a precedence to, you know, 80+% probability or greater of going up. So I've put Southwest Energy down, but again, with the caveat, wait for the market trend to reverse. Okay. Let's see. You know, I looked at my spreadsheets for last year, because I also look at what worked and what didn't work. And there were several of them that I've added again to this year that did work. Doesn't mean they're going to work this year, but they did work. Nucor happened to be one that I made money on last year. It had a nice 8% move, which is real close to the average NUE. Oh, wow. Unbelievable. Whew. Just slammed with the rest of the market. When I looked at it, I was looking at November 53s. Was it 53? I don't have a 53. Oh, I know what happened. My Excel sheet was not set up for the placement of decimals on that one. There it is, 52.5. I had to fix it. So this is what I was looking at. 52.5s, 53.32. The 50% retracement is 53.48. They have earnings coming out on the 23rd before market, which is October 23rd before market. So that's one to look for. And you can buy it for dirt cheap right now. And again, I don't know if the 52.5 is still relevant based on what's happened today. 8.17. $48.22. Well, it's only down 49 cents. No, real close. I think this thing will pull up before earnings, and so that's still a realistic trade for me. And it's inexpensive. You could almost get it for a 1% premium. I had a bunch of notes here to look at. Oh, I know what I wanted to show you guys. So looking at this trade, 8 out of 7. It doesn't look like a big mover, but there was some interest. I was just looking for different plays. So then when I have to do a think back on this to show you what I saw, this is on 10/9. Bear with me 1 second, folks.
There are 9 other callers on the call.
Okay, my apologies.
There are 9 other callers on the call.
What did I see? Oh, this is what I saw. See that? 10 times the open interest somebody loaded up for the October 57 and a halves. And that was on the 9th, so that would have been last Thursday. I thought that was really interesting to point out. It was down $3 and some cents. Where did it go? The 10th. Why is this not working? Should have been something on the 10th. Okay. Well, gosh, now it's down 457, so that doesn't make any sense. Again, another energy company, and it's October, so most people, I'm sure, lost their money because it's certainly not going to be going to that high based on a historical move. And this thing's just tanked down. Of course, they're thinking of it rebounding up to here. It's moved $7 in 2 days. Could it do it again? You know, when you see big, long bars like this, even on Best Choice, you know, that tells you there's some intraday volatility with the security. You see very small bars like this, and that obviously means there isn't a lot of intraday volatility. But historically, I've seen a couple of days, so, you know, it's possible that thing could bounce back up. Anyways, I wanted to show you that. One of the ones I had success with is the company that owns the venue that I provide these webinars through, Citrix, owns the GoToMeeting, GoToWebinar, and GoToMyPC. CTXS, bouncing off of the 89, at least as of yesterday. Busted way through today, of course. But this thing gaps. You can see that. Seasonally, you know, it's towards the end of the month, but it does have a historical precedent, 80% to go down, and it's already, you know, done 6.62% of 733. So it's something to keep on the radar that could be coming up. Company's, you know, solid. There's nothing wrong with it from a fundamental standpoint. They're coming out with earnings after market on Wednesday, the 22nd. I didn't list it down, but you guys may want to write it down, take a look at it. I've made money off of them. I remember the first year I traded them only because I loved when I learned about GoToMeeting and GoToWebinar, GoToMyPC. I finally convinced the old man, Sonny, to be able to allow me to work out of my home. Finally developed enough trust with him to be able to do that because he's a very non-trusting person until you get to know him, and then he's basically a paper tiger. And so I said, gosh, you know, what a great company, it's allowed me to really expand my business. So I traded them and I did well. I don't remember which year that was. Probably it could have been 2011 when their earnings popped real strong. Obviously it wasn't 2012. It may have been even 2010. Because I had actually started working out of the home in the fall of 09, so I don't think I traded them. So it had to be 2010 that I decided to do that. So a little spotty in the last 4 years, but something to keep on the radar. Citrix, which is coming up towards the end of the month on the 22nd. What else did I write down that I wanted to show you guys? CAB. If you guys are looking for a short, here's one that's got a historical precedent to go short of a 90%er. Oh, there's huge puts, Bob, on CTS. I didn't see that. Oh, my Lord. Yeah. A lot of short interest on that, so maybe stay away. There's that much short interest, boy, that's, and there's nothing even close to that on the long side. So maybe somebody knows something. They were buying all sorts of puts. I wonder what it was. That's today's date. Let's take a look at a think back and see what it was on Friday. You can see that's where it is right there, but let's see what Friday's was. I don't know why it's not showing me the 9th. Oh, wow. Well, it was still 22,000, so yeah, they've been sitting there for a while too. You see that? So these people are obviously making money. They bought the 65s and, below this price, and it's done nothing but gone down since. Yeah, I mean, these things have been sitting there for a while. I'm all the way back to the 28th of September. So be cautious on that one. Thank you for bringing that to my attention, Bob. Kind of similarly here for CAB, Cabela's Inc. There's 4,000 contracts at the 60s to short in November, but this one has a historical precedence of going down. 90% probability, 7.03% average move. I already did the fibs on all of this stuff. What did I look at? November 55s. Is that what I was looking at? November 55s? Or 65s? I forgot what it was. Couldn't have been November 55s. I have that wrong. Oh, wait a second. What day am I in? I'm sorry. No, I'm in the right day. I'm on Citrix, though. That's what I'm on. There we go. So, yeah, there was double the volume today versus the open interest. More likely those are people that bought contracts, didn't sell them. You could always sell it, though. You could do at the money, buy a vertical. 280, that's too rich for my blood. It's got to be under 250 on a $5 spread because I can't even double my money on that. So that's too expensive for me, especially on a Monday, buying so much time in November. They're coming out with earnings, by the way, Thursday, October 23rd before market. So this is reasonably priced. You could even reduce it by buying a vertical 55.65, even though I normally, whenever I buy a vertical, be it a put or a call, I like to be in the money on what I'm buying. And here I'm out of the money still by not a lot, $1.36, but I've just learned from experience I'd rather be in the money, even though it's cheap. Doesn't mean the stock can't move into the money real quick, and we got plenty of time. So when you buy that much time, and again, you're buying a spread, so like one of our members, Bob, brought up to my attention, which makes sense, is he's, like I told you guys in the beginning, you can buy these spreads, and when the trade, even if it's going against you from a directional standpoint of what you expected it to do, i.e. a bullish trade, you're buying a bull call spread, you sell that leg. You're buying one and selling one. You're buying one that's a little bit in the money usually, and then you're selling one that's further out of the money. Well, if it starts to go against you, the one that you bought that was slightly in the money is probably now at the money. Sell that puppy, buy it back, and then let your one that you sold make you profit and just let it run, especially when you're buying so much time. Okay? So that's CAB. Just some quick ones for you guys to note. I have a bunch more earnings trades. Obviously you guys know the Priceline's coming up, but that's not till November. MasterCard's coming up. That's not until the end of the month. I've listed them on the spreadsheet so you guys remember them. Again, the strike prices I'm looking at right now are way out of ballpark, but I listed them for you so you guys. Oh, now one of the ones I made money also last year was Sina. Sina's coming out with earnings Thursday, October 23rd after market. Now see, when I highlight this based on best rating, it takes me out to around the 21st, 100%. If I go to best profit, highlight here, There's my 90%er. The only year it lost was last year. But still, you see the spike up, guys. When you see something like that, when you highlight each year, this wasn't as good. That was definitely an earnings. This right here was an earnings when it spiked up hard, straight up like that. So it's got a historical precedent. I did list it last year in webinars I was doing, and people made money on that. So just based on the standard best trading whole zone, we're looking at about a 13% move. November 85's 1,700 contracts. Wow, how about that for a strong company, huh? Market went down 223, it went up. Tells you there's some strength in that company. Another one to take a look at that I made money on last year, and I'm always questioning about this one, Amphenol. But I made money on it last year. So Amphenol is coming out with earnings on the 23rd. Again, these are all towards the latter part of the month. Sign of the same thing is on the 23rd. Both these two companies I'm just mentioning coming out after market on Wednesday the 23rd. I was looking at November 100s. Oops, November 100s. That's way out of whack. I'm going to have to change that. I don't like that short interest right there. .79%. $47.74. Yeah. So 47 and a half. Okay. Anybody have any other stocks? Now I have a whole bunch of seasonals that you guys should be starting to look for. Deere's coming out, DE. So remember that. That's going to be coming up here shortly. Let's do a best profit per trade all the way to the end of the year, starting towards the end of the month. If you want to look at buying a leap on this thing. Oh yeah, Apple's coming out next Monday. Good point. Thank you. Lori, I appreciate that. I forgot about that. Did I list that before on my last one? I did not, so I should list it on this one. Yep. Oh, I know why I didn't. Well, but that's important. That's good that you bring it up, Lori, because there's no way we'd be able to analyze this, and I need to bring it up on today's date because our webinar's at 4 o'clock. So, yeah, Apple's coming up on the 20th. Their iPhone 6 is supposed to be just outrageously doing well. Let's take a look at that one. %90 probability, 8.07 move. $99.81. times 1.087. I believe that's what it was, wasn't it? No, 807. Puts me at about a 107. So we're looking at the November 105s for $1.65 by $1.69. So you're paying less than a 2% premium on that. That's where all the open interest and volume is today. I mean, that's where everybody's, a lot of other people loading up further out. Let's take a look at what the charts look like. Well, let's take a look at best choices first. That's interesting. I like this pattern. What a beautiful looking pattern. Just beautiful. Bouncing right off that 49. You can see how well that's used as support on this specific security. MACD still looks, doesn't look like it's ready to turn around quite yet. But it's not on the oversold territory either, though, so that's a good thing. We were looking at the 105s, I believe, right? So where does that fit in linear regression? Right between the mid and the high, right? That's where Pete taught me the sweet spot is, and that's just beautiful setup right there. The 105s between the mid and the high, fitting right in here in between these two linear regression lines that are one standard deviation. So I like that. Unless things radically change with the price, to be honest with you, this thing has legs to go to 107. That's just based on today's price. I mean, even if it went down a little bit further tomorrow, I'd still be looking at the 105s. Let's see what the probability cone says on it. $1.10s. Wow, 105 I think is real good. That's the 38.2 retracement. Of course, that was using that particular wow. So yeah, actually, if I brought this down a little bit because it closed at 991, it's just down. 38.2 would be 111. So 110. Yeah, 105 is very conservative. So yes, Miss Grant, that looks good for Apple. Any other trades you guys want me to go over? I've got a bunch of others for you to look at. I think I showed you DE was one that was coming up from a seasonal perspective. It really has nothing to do with earnings. But from a seasonal perspective, it's a really nice looking trade. 10 out of 10, 15% move. Could even look at January's. 15% on $81. Puts me at 93 approximately. So I could look at the 90s, even look at the 87 and a halves for $1.28. There's 9,000 contracts in there, and that's the one I would look at only because my delta is above 20. So I mean, if you wanted to buy some time on that, make money on that one. What other ones? Got a bunch of other ones for you to look at on the charts. It's a little after 5 o'clock. Any trades you guys want me to take a look at real quick besides what I've already done? Go ahead and type it in the chat box, and I'll be glad to take a look at it. Oh, yeah. Back to that one, NQ. May have been pulling the trigger a little bit too soon on that one. Let's take a look back at this. Unbelievable volume right there. Jeez. There's a lot of short interest right here. People loaded up big time. Somebody went in hard today. Bought over 1,000 contracts on 31 cents. So spent $3,100. Well, it still has strength, folks. It's up 32 cents. And again, a down market. And it's above the 89 there. Can you see that? I don't know if it's too messy for you. So, yeah, everything's still a green light on this, in my opinion. Everything's still a green light. All right, any other stocks you guys want me to take a look at? Go ahead and speak up. I'll be glad to take a look at them. No? Oh, yeah, Greg brings that up. I was thinking about Citigroup too. It's one of the first things I was looking at today, as a matter of fact. There's a lot of talk about it out there in the marketplace. And a lot of people are looking to buy this, actually. Earnings are coming out. I mean, it's been beat up like everybody else. And they're supposed to be on the 14th, which is, what is that, Wednesday before market? From a seasonal perspective, though, Greg, it doesn't look good, unfortunately. From a seasonal perspective, it's actually more precedent for a short, 80% probability, actually. From a historical perspective, it's trending up. The 49 and the 89 have broke above the 200. That's very significant. Sure, it had a gap down today, but really kind of bounced off the 89 as support. If you were strictly going to go based on fundamental news, there's been a lot of good talk about there. I know a lot of the people, one of the ladies on Fast Money really, I mean, she's buying options on this thing. And if you look at the interest on it, I think there's a lot of interest on the positive side. You can see right here, huge open interest, as well as on the Leap side. And you can see, 95,000, 50, 88,000. There's a lot of short interest going way out of the money, but you know what? These guys could be selling premium. I mean, that's one of the majority of people who trade. That's what they do. They're doing credit spreads, because if you go into a game where you know that 80 to 90% of all options expire worthless, then the smart trader is going to play those odds on their side of the game and go way out of the money and sell premium. I know some people that's all they do. They go look for suckers every day. Somebody's willing to pay them, and the likelihood of Citigroup going from 50 down to 30 is pretty unlikely. So you got 30,000 people there that are collecting money at 14 cents or whatever they've got, 12 cents. You buy 1,000 contracts there, you got $1,200 in your pocket. And then you can, of course, if it does continue to go up, then these things become worthless. And you've just pocketed all that money, and you could say, thank you very much. Let me start fishing for another sucker. So I know from a fundamental perspective, Greg, it's a strong-looking trade. Reason I did not list it is because it goes contrary against seasonality, which, as I said, is a 80% probability to go short. And when you look at it, where does it stand in its historical perspective, it's kind of follow the composite to a certain degree. Looks like it may pop up again. What did it do last year? Well, it kind of took a pop. Took a pop in 2012. Went up in 2010. So it's possible. The only way, I guess, and it's something I didn't analyze, and what I would have to do is I'd have to what I would do is go and look at every single year for the last 5 years of what did this security do during earnings season, right in here. Last year, did it pop? There's earnings. Yes, it did. It went up. So last year was a good year. What about in the year before? There's earnings. Did it pop? Yes, it did. Pretty close to the money. So there's 2 years precedence. Let's go to 3. Earnings, yep, went up. So we have 3 years of precedence. 4 years, kind of sideways, then popped up a little bit sideways and then went up. So I don't know if you would have made money right away. You'd have to buy some time and hold on to them and maybe whipsaw it a little bit because volatility would be sucked out, but then finally things would catch up. Because this is the close before earnings at 39.50. It went up to a high of 41.70. So, if you bought at the money, you made some money. But, if you bought at the 40 strike, for example, this is where you would have made money, and it would have taken you about a week and a half to 2 weeks to do that. So based strictly on, now this year it happened to go down. That was 1 year. So 4 to 5 years in the fourth quarter earnings, it's done well. And there's a lot of interest from the trading perspective for both November and buying some time. So it's not a lot of money. If you decided to, buy the 52.5s, and November's it's potentially 55.28. So the 52.5s is right smack in between that. It's at the bomber linear regression. So, you could take a chance on that one. All right. Any other trades you want me to look at? Okay. Thanks a lot for attending, everybody. And I look forward to speaking to you guys next week. Good trading, and be cautious in this market. We'll talk to you later.